Hi again everyone, I hope you're all doing really well. This is a quick follow-up video on Senseonics Holdings, ticker symbol SENS or SENS. Basically during Friday's trade the stock got poleaxed and seemingly more or less ending many hopes for a further rally of a short squeeze. The stock's fortunes were influenced by a double whammy of two news headlines regarding the FDA approval for their much anticipated continuous glucose monitor, as well as some updated earnings expectations from the company. What I'm looking to do with this video is to make a comment about the potential of the short squeeze still occurring for the stock, as well as give some thoughts on the future of the company, particularly for those left holding the stock following Friday's sell-off. So let's get into it. So just to start with really quickly, let's look at the news headlines, which most of you probably already know about regarding SENS. That being that the company has received a 6-month approval for their continuous glucose monitor, meaning the company can now go to market with this much touted product. This news in itself for the company is great news, as they had been waiting for this approval for some time. However, regarding the stock price action, basically, this news catalyst was one that many watching the stock had been expecting. I suppose there were two camps of thoughts. There was one that was hoping that this would be the catalyst for a further rally in the stock, and then there were others that were expecting a bit of a sell-off to occur, which has indeed happened. Friday's announcement definitely seems to be a case of buying the rumour and selling the news coming true in this case. However, the other news, along with the FDA announcement, came an updated earnings guidance from the company, which I think is more interesting than the FDA approval headline, because this was highly anticipated. The company is now expecting to make revenues of between $14 and $18 million in 2022, which will be at least some sort of improvement on the expected final 2021 earnings results of $13.7 million. These future earnings will obviously take into account sales of their existing product lines, as well as the expected sales of the new glucose monitors. Now, while this product has been highly anticipated, I guess now the questions to be asked: how quickly can the company manufacture the product and bring it to market, as well as partner with medical professionals who will be able to further push its adaptation in the general public? I think it is these questions which are spooking stockholders a little. If it is slow to make sales on the new product, earnings growth will likely hit the lower end of the forecast of $14 million, making for what would be a rather flat 2022. However, if they manage to get to market quickly and reach the top of their earnings guidance, this would be a phenomenal result for the company, as it would represent a 33% jump in revenue year on year, which for most businesses represents significant growth. I suppose if you are long on the stock, you will be watching for updates on how quickly Senseonics are able to start making sales of this new product, and if it were me personally, I would be particularly watching out for the Q2 earnings results later this year, which, while some time away, will hopefully give a good early reflection on where the company is traveling in terms of the sales of the new glucose monitor. Obviously, the back end of the year is when most of the sales are likely to come, as the production and distribution of the device has hopefully matured by that point. But I feel that by Q2, you should be starting to see some action there in their numbers. But I could be wrong on that. Moving on to the potential of a short squeeze reigniting. Prior to Friday, I had this red rectangle on my charts to capture distressed short positions. Obviously, as SENS stock continued to rally, it expanded very quickly. However, following Friday, we can see the trapped distressed short positions has now greatly reduced to this small box here. One of my original concerns about any potential short squeeze rally in this stock was that it actually never really traded in huge volumes. And even though Friday was the heaviest traded day in the last 12 months for the stock, these volume figures are still not very high, especially for a stock that is potentially being targeted as a short squeeze. Anyway, one thing that we can conclude about the 33% price drop is that the stock has been largely oversold on Friday, as seen in both the RSI and the fact that the stock traded along the lower limit of a hugely expanding Bollinger Band. Based on these indicators, at the bare minimum, there could likely be a bit of a day trade opportunity coming for the stock on Monday in the shape of a bit of a dead cat bounce. This bounce in the stock is further supported by some slight bullish divergence emerging here in the MACD indicator. The last 3 hours of trade made a continued series of low points. However, the MACD histogram is showing signs of pulling back. Last time I looked at this stock, I saw some bearish divergence in the MACD, which did show at least a temporary reversal in the stock's fortunes, leading into the Friday sell-off. So perhaps the MACD could be again showing us a reversal is coming for the stock, perhaps as early as Monday. Now, glancing over at the shorts data, on the surface, there is still a bit of a case for a potential short squeeze to happen. While the stock price and market cap have dipped and SENS has slid down the short squeeze candidate ranking on Fintel to 22nd after being as high as 4th on Wednesday, what has been quite pleasing is that the borrow fee has crept up and the average days to cover has significantly reduced down to 2.45 days. This means that those holding the bulk of remaining shorts positions are getting to a point in time where they need to cover their positions early next week. This, coupled with a bit of a return in a price rally early in the week, means we could indeed see a strong push for the stock and arguably a reignition of the short squeeze rally. However, it is important to realise that there can be a bit of a delay in these numbers finalising due to settlement periods. Also, while the 24.75% of float shorted seems quite high, this number was from Wednesday and it is a figure which is only updated accurately about 2 to 3 times per month. So while the shorts data perhaps says that there is still potential for a short squeeze, be careful with how you read into the numbers. On one last note about the stock, when you consider that of the 7 brokers covering the stock, there is a hold consensus with a median 12-month price target of $3.75. This means Friday sell-off could be an excellent entry point for those who wish to hold the stock longer term, as it reflects a more than 50% 12-month upside if realised. Obviously, the fact that the stock had been up around the $3.75 price point earlier this week was perhaps off-putting for those who did indeed want to invest in Senseonics Holdings for the longer term. For those playing the short squeeze, perhaps if the stock does not come back soon, those left holding the stock after Friday, perhaps this is a silver lining. That being the prices are, at least from the latest broker data, expected to recover in the future, making it not the worst stock to be left holding at this point in the game. Anyway, it would seem that the stock was oversold on Friday and that some sort of reversal seems to be coming. There is still a case to be made for a potential short squeeze if the stock does reverse early in the week, especially as the average days to cover continues to erode. If the discounted stock price is able to entice enough longer term investors to the stock, in combination with the shorts looking to cover, we may indeed see yet another sharp run from the stock. And like I just said, if not, worst case scenario, the stock is expected to get back to around the levels it has reached earlier this month, later on in the year. And when you consider the company is on an improving trajectory, it really does make for Senseonics not being the worst stock to be left holding at this stage. Anyway, what do you guys think about the state of play for SENS stock? Is the short squeeze over? Will we indeed see some recovery in price on Monday? If so, by how much? Let me know your thoughts in the comments below. Until next time everyone, may the markets trade in your favour. Cheers.